So you want to catch a breakout, but every time you get into a stock for a breakout, it immediately slams back down onto you. When in all reality, all you want to do is just catch a nice fat move like this. Unfortunately, this happens all the time to traders. There's one way to avoid it, and I'm going to go over that in this video, so stay tuned. So we've all been there. We get into a stock thinking it's going to break out massively to the upside, make massive gains. But the second we press that buy button, the stock immediately just dumps on us. I've been there, I'm sure you've been there. It's the worst feeling in the world. So in this video, I want to go by a certain method that we've been using over here that has been working very well for us. And it starts with the higher time frame charts and a specific moving average. So let's jump right into the video and I'll show you what I'm talking about. Let me just close this down real quick. All right. So we'll take a look at the stock INDO. We've been having some crazy movers on the gas, energy, oil plays, whatever you call it. And a lot of stocks have been breaking out. And also a lot of people have been making money and a lot of people have also been losing money. So let's jump right into it. So we're going to look at the hourly chart here. Now, if you don't have it up already, I would suggest having the daily chart up for sure, and a medium time frame like an hourly chart, and then your entry time frame like a 5 minute or a 1 minute, something like that, especially if you're day trading. Now let's go ahead and take a look at the hourly chart here. Every single time the stock starts to pull away from this white line, which is the 9 EMA, once it starts to pull away, you can see that eventually what happens is it corrects back down to that line. Okay, you can see it right here. You can see it right here where it starts to pull away. There's a big gap between the two, and then it comes slamming back down to that 9 EMA. You see that? And especially right up here, you can see how it starts to pull away. And sometimes you might be a buyer right here, and then boom, it dumps right onto you, right? So you can see how critical that 9 EMA is on the larger hourly time frame. It shows us that when the stock starts to really pull away, that it's going to be due for a pullback to that 9 EMA. And you can see it on so many different charts. If we just pull up different multiple charts and just start studying, tracking, and back testing, you can see what happens. The stock goes up on the hourly here, and then what's it do? It pulls back, and then it makes another move up, and then it pulls back, and then it makes another move up, and then it pulls back. And that's holding trend there is what you call that. It's trending. So I'm just going to jump right into it, guys. The simple thing is that you never want to buy a stock when you see the hourly chart is extended from the 9 EMA. So you can see here, if I would have bought right here on this candle here for the breakout, it wouldn't have gone anywhere. It just stayed still until that 9 EMA caught up. You see that? So you can say to yourself, if you're looking at the chart and it looks like this, right? And you can tell that the 9 EMA down here is way below this candlestick, you can say to yourself, well, if I think I want to take an entry here, I feel like it's probably going to want to come back to the 9 EMA before it makes another leg up. And then you can see we can see it pulled back right to that 9 EMA, and then it made another move up, and then it pulled back to the 9 EMA, and then it made another move up. And then you can just see how it just works so well, really. And you can see right here, big move up. Now say if before you may have been like, oh, I'm tempted to buy. I'm tempted to buy right now, right? Say you're looking at a 5 minute chart, you're looking at a 1 minute chart, and you're like, wow, this is a really good entry signal I have here. I feel like the stock's gonna go higher. But then what? Then you look at the hourly and you say, well, maybe I should readjust and rethink my thesis on this trade, because look at how far, or extended is what we call it, the stock is from the 9 EMA. It's very extended. So that could be a way to gauge a good buy or not, because you know that the stock is probably going to need to come back down to this 9 EMA before it makes another move up higher. So as you can see here, I decided to not, so let's just say this is a live trade, and I'm thinking, okay, well, I'm looking at the 5 minute chart. The 5 minute chart looks really good. But then I look at the hourly chart and I'm like, you know what, that's just way too extended for me. I'm going to pass. And then you let the time go by and you can see, boom, it pulls back to that 9 EMA. And then once it pulls back and corrects, then it does another move higher. So in essence, what we're saying is it's always a good idea for a stock to be near the 9 EMA for a buy signal. In this case, you can know that the stock has been corrected, it's rested, and it's ready to go higher. And the flip side of that, if you see a stock that's far away from the 90 EMA, then you can tell yourself, well, this probably isn't a good buy because it's probably going to need to come back down and correct and test that 90 EMA before making another leg up. Obviously, there's rules, exceptions to this rule. As you can see here, it just continued to go higher. But look, you can see it's eventually starting to pull back, and the next hour is probably going to be near that 90 EMA. So, in essence, this helps you to not chase stocks. It helps you to not have FOMO, because this right here alone tells you enough. If you go through, collect enough data for yourself, then you'll be able to rely on this as a very good guide to prevent buying extended stocks. And you can see this very clear example right here on NINE, where we had some move up right here, and then the stock pulled back right here to the 9 before making another nice move up higher. So guys, I hope that helps you. It should help you to prevent you from chasing stocks. It should help you to know when not to get in. It should help you to know when to get in. And I personally have a few hard rules based around this alone in my trading. And this is how you can use the power of multiple time frames to gauge a buy signal in day trading. When you look at bigger time frames, you're looking at what other traders are doing. You're looking at what swing traders and investors are doing, because they typically use higher time frames. So if you can combine the power of multiple time frames into a day trading strategy, it's probably your best bet, because then that way you have an idea of what just more than day traders are looking at. You're looking at what the broad variety of other traders are looking at. All right, guys. Well, I hope you enjoyed that video. It was a very quick one, very simple, right to the point. I hope that can help you from chasing stocks. I hope that can help you from having FOMO. And I hope that indicator in that hourly chart really helps you to create a strategy, a system that works for you. All right, guys. I'll see you in the next one.